Namaskaram. Hello.
Hello, Namaskaram.
Namaskaram. Namaskaram, sir. Namaskaram, sir. And the link in email because everybody getting only on the phone, people may have discomfort in talking on.
Yes, sir. That was because the whatever supposed to be the CD, that CD ICSI. The CDA kadachadu naanga link anupchapirundom. So idhula ellaroda email kondu varadhukku konjam process edukum.
Acha, at least for me it will be helpful.
No, நான் என்ன பண்ணினேன்னா அதுல இருந்து நான் மெயில் அனுப்பிச்சிட்டேன். அதுல இருந்து மெயிலுக்கு டிரான்ஸ்ஃபர் பண்ணி அப்புறம் நான் அந்த ஐபேட்ல பாக்குறேன்.
அப்படியா?
அவன் எனக்கு அது ப்ராப்ளம் ஆச்சு. என்ன இது எப்படி இது ஒரே ரொம்ப இதா இருக்கே அப்படின்னு. மேபி நெக்ஸ்ட் டைம்ல இருந்து we will அந்த ஹலோ live now. Okay, sorry. Okay, sir, आपका पेश.
Okay.
Sir, we may start, I think.
I think you have to do opening remarks.
Okay.
I'll do the subject introduction.
Good morning. Welcome to Sage Governance Advisory. We are resuming our webinar series from today. We're planning to host a webinar every month on some topic, on any topic which will involve corporate governance processes or issues connected with corporate governance. So in this regard, we felt that it would be ideal to have a talk on the parameters concerning which determine the shareholders' approval. So we requested IIAS, which is the short form of Indian International Institutional Investors Advisory Services Limited, to depute Mr. Anup Pawar, who is incidentally Group Head Research, to communicate to us the various nuances and the niceties of the parameters which govern the shareholders' approval. As you will recall, that there have been various instances where companies have brought in resolutions which have been defeated at the hands of the shareholders. And the proxy advisory services have played a significant role in contributing to this part of the decision making. So now I now hand over to Dr. V.R. Narasimhan to take over to introduce the subject in depth and also to introduce the speaker. Thank you.
Good morning, everybody. Good morning, everybody. We are happy to be back on this webinar series with this very contextual subject on the throes of finalizing our annual general body meeting agenda, annual general body meeting items, etc. And we have a very active proxy advisory services talking to us, Institutional Investment Advisory Services Limited, Mr. Anup Pawar, who comes with a huge amount of experience in the areas of corporate governance from the investor's perspective, investee perspective, banker's perspective, and several perspectives. There is a reason why we have chosen this subject in this month of April, because we are now entering the season of annual body meetings. While the retail shareholders have been fairly passive and not showing so much of enthusiasm to participate in the corporate governance processes or corporate decision-making processes, thanks to stewardship code, thanks to regulatory kind of a mandate that institutional investors shall participate in the corporate governance processes, and also a very active contribution of the proxy advisory services, essentially IIAS and SCS Services Limited, who have been rendering very good services to the institutional investors in the country. We see that these proxy advisory services are very sensitive and they are very attentive to certain decisions being taken, which always are questionable in the context of a corporate governance. For example, the remuneration aspects, related party transaction aspects, selection and election of independent directors, their qualifications, and then finalization of accounts with or without giving the consolidated pictures or say subsidiary account details, etc. Quite often, the corporate action decisions, especially with respect to acquisition, split, bonuses, or even for that matter, mergers, amalgamations, where valuations are at a question, we see that corporates take it little light in terms of not giving as much information as possibly the shareholders deserve. In all these areas, institutional proxy advisory services have been very sensitive, and they have been very forthright and very professional and practical in terms of their suggestions to the investors, institutional investors, in terms of whether such resolution should be supported or not. We do observe that institutional investors, the proxy advisory services, they consider not only the Indian corporate governance standards given in the LODR, but also they take into consideration the international standards of corporate governance and often go to the extent of questioning certain decisions from ethics point of view. You may be compliant, but are you ethical? You may be compliant, but are you from the governance point of view okay? Is a question that they always ask, and in that context they render services. And we have seen in the last at least 3-4 years, thanks to this active participation and contribution of the proxy advisory services, quite a few resolutions which were actually sailing through the general body meetings earlier have got questioned and some cases even rejected by the general body meetings. It's not a small achievement. The whole country, we should complement the proxy advisory services on the one side. On the other side, as corporate governance professionals, once we understand what their concerns are, possibly when we are trying to make some proposals for the forthcoming general body meetings, we can be prepared and we'll see that our decisions and our proposed resolutions sail through. This is a broader context in which we have actually brought in this topic to be presented before you all. We have a specific request to you. While the group of people who are involved in this selection of topics for this group, we'll also welcome suggestions from all the participants, because it's after all for the participants' sake that we do all these programs, and therefore we'll be very happy to receive suggestions both on the topics and also speakers, And wherever our resources permit, we try to bring the speakers as well, and also try to present perspectives on various subjects. A lot of things to be done. As we see in the future, the regulator is very active, investors are very active, proxy advisors are very active. We should be sensitive to the corporate governance issues and challenges, and therefore your suggestions will be most welcome, and we try to accommodate most of them to the extent that our resources and time permits. With these few introductory words, I'll hand over the session to Mr. Anup Pawar, a seasoned banker, now heading the research and analysis portfolio at IIAS, which in short would mean that he is the person who examines all the proposed resolutions of general body meetings of the listed companies. In fact, if there's only one repository of all the resolutions passed by all listed companies, here it is. Anup Pawar, who is actually seeing, examining, studying all the proposals of all the companies in the country, I think is the best person to talk to us. Mr. Anup Pawar, it's the sessions to you. Thank you.
Thank you, Dr. Narasimhan. Thank you for that flattering introduction. I've had the privilege of speaking at a few, events at NISM because of you. And I've really enjoyed that experience as well. So thank you again, Sage and you, for giving us the opportunity to speak. So the intent is I have a presentation, right? So I'll make that soon enough. But the intent is to just give the participants an idea on how we think about, resolutions, how we approach resolutions when we are actually looking at them. So let me just start by sharing the presentation. Just let me know if you can see it, and then is this visible?
Yes.
Okay, great. So a quick introduction of IIAS. So we've been in existence since 2010. We right now, as we speak, we cover some close to 1,000 listed companies. So any shareholder resolution that's proposed by any of 1,000 odd companies, we kind of cover it. We write out our proxy advisory reports on it. So till date, from the time of our establishment, we've covered over 11,000 meetings as of now and counting. So every day that ticker just keeps increasing because of the number of shareholder meetings that we now cover. And if you look at that, resolutions number, that's a staggering number, 63,000 so far. So needless to say, we've seen every kind of resolution being proposed. We've kind of, analyzed every sort of resolution that's been proposed by these listed companies. And apart from that, right, as a proxy advisor, so one of our roles is as a proxy advisor, but we kind of take pride in saying that our role is not simply as a proxy advisor, but trying to improve governance practices across the board and trying to bridge that gap between investors and companies when it comes to disclosures or, how to disclose, what to disclose, how much to disclose. So we kind of make it a point to do a lot of research. We churn out a lot of research every year. All of this, so you can have event-based research. So with the Adani Hindenburg issue that happened, we put out a paper. There's certain specific themes that we do research on regularly, remuneration being a very important one of them. Any kind of regulatory changes that are coming in, we kind of put out our opinions. And these special reports, which maybe I'll come to in a lot more detail subsequently. And all of this, let me just tell you, all of this is available for free on our website. There is no payment that you need to make to access this research. So encourage all of you to go through our website. All of this research is available because the intent is to just make all of our thought processes and governance, whatever is happening in the governance and ESG space, available to everyone free of cost. We've kind of diversified, I guess, logically from G into ESG because of the amount of interest ESG is getting from the investor space. So if you look on the left, so that is a second party opinion. That is our opinion on the sovereign green bond framework issued by the government of India very recently, beginning of the year. This is unsolicited, so we kind of did our own research and put this out. We are a signatory to the PRI, Principles for Responsible Investment. So any decisions that we make, any of our thought processes, we have to embed ESG and G principles within that thought process. And subsequently, we were also empaneled with AMFI as an ESG ratings provider. On the right, you will see some ESG research. Again, that's available for free on our website. Do encourage you to take a look at that. In addition to that, we have multiple products. There is this governance framework that we have. We do a detailed score on listed as well as unlisted companies. Companies come to us, can ask us, how do we improve our governance practices? So that's the product that helps them do that. On the right, Dr. Narasimhan also spoke about it, but we have a repository, of course, in our heads, and we've kind of formalized it and put it into a web-based tool called IIS Adrian. So that is a repository of any resolution that we've covered over the last 10 to 13 years. This is our board here. If you look at them, each of them very recognizable faces. Our management team, of course, is headed by Amit Tandon. Amit is on the call, incidentally. Hetal is our president and COO. So Amit is, running the day-to-day operations. He looks at all aspects of the business. Hetal is more responsible for the research kind of aspects. And we take pride in the fact that, we are backed by almost all of the largest corporate, financial houses in India. If you look at these names, all of them are recognizable. Although while all of them are, invested in us, they have an equity stake. None of them have a seat at the board because we pride ourselves on being very, very independent when we give out, our advice. Before I get into, so what the plan is to, touch upon 3 or 4 types of, resolutions which have the most pushback from investors, where there is a lot of debate in the minds of corporates and investors alike. So I'm going to cover broadly ESOPs because that's the flavor of the season, RPTs because honestly, that is the most time we spent on RPTs. I'm also going to cover remuneration. As Dr. Narasimhan said, the amount of debate again on remuneration, the kind of disconnect between investors and corporates that is there on remuneration is quite stark. So probably trying to explain that. And by the end, maybe just touch upon a couple more resolution types where I'll give you a sense of our thought process around it. So before I get into those resolution categories itself and what we look at specifically, I thought I'll just spend like a couple of minutes, not more, on our voting guidelines. Basically, it's a document. It's available on our website. It's a public document. We update it every year. It gives corporates and investors a sense of how we look at certain types of resolutions, and that covers all types of resolutions that we've come across. So there are some, close to 20 odd categories of resolutions that we've covered. And I also thought I'll give you a sense of our voting process. I know this is a lot of information on one slide, but what I would just like to highlight is, whenever there is a shareholder resolution that comes up, there's a lot of thought process. There's a lot of process behind how we finally arrive at the final recommendation that is eventually sent out as a proxy advisor. So what I'd just like to highlight here is that all of the resolutions that we cover, the final recommendation, the for or against, is not a single person's opinion. At the end of the day, it's the house's call. It's the house call. So basically, we have a review and oversight committee where a bunch of us senior folks sit and actually go through each and every resolution that's being proposed. And the outcome, the final report, is the outcome of continuous deliberation of all of these individuals. So the review and oversight committee actually looks at each and every resolution before that final report goes out. So that's something I wanted to point out. Also, what is unique about us as a proxy advisor, and I think it's not just in India, but globally, is when we look at when we put out a shareholder, a recommendation report with all the resolutions, we actually send a copy to the company itself, before it is even circulated to clients. That's simply because we think that companies must get a chance to actually look at what we've thought about, look at the contents of our research and give their opinion or correct some facts or add some facts where necessary. And only after that is it actually circulated to everyone, including the broader investor community. So that's something very unique about us. Thought I'll highlight that. So in a nutshell, what we do differently from other proxy advisors is any decision that we finally take is by a committee of people, not an individual. So it's not one analyst decision that comes through. Second, I think we have a fairly practical approach to all of these, voting recommendations. We are constantly in touch with corporates. We are constantly in touch with investors. We look at resolutions very practically. That's kind of unique about us. I know some things are better, said in books, but, translating into reality becomes very difficult. So we would like to think we have a very practical approach. The third I've already covered. We engage with companies even before the report is sent out. In fact, whenever there's a shareholder resolution proposed, there are many times where we actually call up the company and say, hey, we don't understand this part of the resolution, or this is our interpretation. Is there anything else you would like to tell us? Of course, that needs to be public information, but if they want to highlight something, they can. And then obviously incorporating market feedback. Now, because our resolutions are, based out, they're based in reality. We do a consultation process once a year, at least one with corporates, another one with investors. We recently had in March and April a couple of events where we actually sought feedback on our voting guidelines to see if anything needs to be tweaked. So in summary, we have a well-defined thought process behind every resolution. It is all embedded in our voting guidelines. I would strongly urge any corporates or any one of you to go to our website. Again, it is in public domain. You don't need to pay. There's no access fee to it. We want to make all of our research and thought processes public. So you can access it at that link. Obviously, we'll share this PPT at the end so you can have a look. Just a few minutes on the landscape, right? How this whole proxy advisory space has changed, and how many resolutions are proposed. I thought it would be interesting to show you what's happened. You guys are all of you are experts at the legal and regulatory pieces, but I thought just highlighting a few of these things that have changed over the last couple of years. All self-explanatory. Just wanted to point out. In Jan 2022, when this requirement came out that all shareholder approval is required within 3 months of board appointment for a director. So, which was not the case earlier. So a lot of resolutions, a lot of reports obviously now increasing, because each time a director is appointed on the board, within 3 months approval has to be taken. So consequently, the number of times companies come up with director appointments across meetings has increased. Changes in the RPT regime. So April 2022, the fourth box here, there was sweeping changes on the RPT regulations. There were new thresholds put in. The amount of disclosures required for related party transactions is just mind-blowing. There's a lot of action that's happened there. So a lot of companies have approached us and said, what do we do? What kind of things that you think we should disclose in a resolution, because there's so much. And finally, in March 2023, if you've gone through the board meeting minutes of SEBI's board meeting in March, again, sweeping changes being proposed, periodic shareholder approval for any director on the board. So that, that thought process around director permanency, directors not being liable to retire by rotation, may soon go away. Of course, that's yet to be notified. And any special rights embedded in articles of association, again, that needs periodic shareholder approval. I'll touch upon that briefly as we go forward. So here, this is interesting, so I'm just giving you some statistics across 2020 and 2022. And this is all the shareholder meetings that IIAS has covered. And we cover around 1,000 odd companies. So this is probably indicative of what is happening in the Indian listed capital market. So if you look at the chart on the bottom left, you will see the number of meetings. So this is AGMs, general board meetings, extraordinary general meetings are EGMs. NCMs are an internal acronym, but these are NCLT convened meetings. So basically schemes or anything that needs NCLT approval, postal ballots, and then the total. So that number of meetings has gone from something in the range of 1,100 to 1,800. Right, because of these regulatory changes, and obviously also a function of the fact that we cover more companies. And if you look at the skew of the meetings, that happened through the year. So this is this is the calendar year 2022 meetings on the right, and the number of meetings that we cover in September, in the month of September, because that's AGM season and companies have to conduct AGMs before the 30th of September. We covered something like 438 meetings in the month of September itself. So that should give you a scale of the amount of work that we do on resolutions. It's a similar chart for shareholder resolutions themselves. So in 2020, we covered 5,800 resolutions. In 2022, that number has gone to 8,500. So quite a significant jump. This is probably the most interesting to me. This is the NSE 500, and what is the percentage of resolutions that have been defeated, that have not gotten shareholder approval in each of these calendar years, 2020, 21, 22. So you will see that that number is quite low, right? So you might think that, given the amount of pushback by shareholders, that number will be very high, but that number is, reasonably low. That's a function of two things. One is, companies are also starting to understand that, investor interest is increasing. They need to propose shareholders resolutions which are steeped in reality. And, it has to be practical. And therefore, that number has remained low. Another reason is, and that should be evident from the slide below, is, because India is largely a promoter-driven kind of corporate environment. So around 2/3 of all the companies listed in India are promoter-head, right? In stark contrast to what is global. Globally, you will see a lot of institutionally held companies. India is kind of different. So that number below shows what are the percentage of resolutions that were carried only because the promoters voted. And that number, if you see, is quite high. It's around 16% in 2022, which means that because of promoter votes, they've managed to scrape through, a large chunk of those resolutions. Otherwise, that defeated number would have been very high, right? Right from 3%, it would have been very high. This is, to me, the most interesting kind of chart that we have. So how to read this chart is simple. This is percentage of resolutions where institutional pushback, which means pushback by institutional investors, where institutional investors are voted against, is greater than 20%. So more than 20% of institutional investors have voted against these many percentage of resolutions from the overall universe. So if there were 100 ESOP resolutions that were proposed, 70% of ESOP resolutions had greater than 20% institutional pushback, which means there was some disconnect between what the company wanted to propose and what the investors finally perceived or what the investors did not like. And that number is the highest for ESOPs, which I'll come to in a lot more detail. Second highest is schemes and transactions with 31%. Remuneration is very high because there is always a disconnect with remuneration at 28%. Incidentally, if you see, the aggregate average for all resolutions is 16%. RPTs is at 15%. That number has come down, right? There used to be a lot more pushback for RPTs, but with regulations getting tighter and tighter, with the amount of disclosures being prescribed increasing by a vast amount, that number has actually come down. So it's around 15%, which is in line with the average. So with that, let me just take you through, ESOPs and what happens with ESOPs. So wanted to give you some headline numbers. We covered in 2022 something like 291 ESOP resolutions. So 291 ESOP resolutions were covered by us as part of the calendar year 2022. Only 3 were rejected. But again, like I said, 70% of these had over 20% institutional investor decide, which means that if promoters had not voted, promoters can vote on ESOP resolutions, but if they're not voted, maybe that number of ESOP resolutions rejected would have been much higher. So what do we look at and what do investors look at when it comes to ESOP resolutions? Number one, exercise price. By far the most important kind of feature of ESOP resolutions. Now there is, let me explain this in some detail because there is a disconnect in corporate India versus the investor community when it comes to exercise price. So how companies look at ESOPs is like any other cash incentive, right? They will say that, ESOPs are a way of rewarding employees. So even if I give it at a discount to market price, so if, market price is currently 100, at the time of grant, they are granted at say face value or 10 rupees. They say, okay, fine, it's the employee that I'm trying to reward. So what is the problem? Investors look at it very differently. And this is across the board. Over the years, over the last couple of years, the number of investors calling me up or calling us up on ESOP resolutions has just multiplied. Because how investors say, look at it is, that if an ESOP is granted at a huge discount, okay, if market price is 100, you're granting it at 10 rupees. What is the incentive for those employees to work harder? I mean, if the stock price moves from 100 to 110, is it going to make a material impact in their payout? Not really, because they're already 90 rupees in the money. So therefore, what they want is, market price grants. And they do not like ESOP plans where NRC says, no, we have the discretion to decide the grant price. That flexibility is what investors do not like. Vesting criteria, very important. So what happens in a number of instances with ESOP plans is they say, okay, we'll grant it at a discount and it'll all be time-based vesting, which means, as you're granted, we'll tell the employee you're granted 100 ESOPs. And as time passes, you'll be vested with those ESOPs and you can exercise them and make money. Investors think differently. They say how they think about it is, ESOPs need to be very, very performance based. So I'll explain what this means, which means that, at the beginning of the year, a company will say, okay, we will give you a maximum of 100 ESOPs, but you need to achieve certain milestones in terms of some key performance metrics to be able to vest those ESOPs with you, to be able for those ESOPs to be finally, granted to you. So investors want to see for deeply discounted ESOPs actual vesting criteria. They want it to be very, very specific. And extension to group companies. Basically, we do not like ESOP schemes of one company, of a listed company, to actually flow through to other associate companies, etc., with their own ESOP schemes. Because the thought process is simple. If the ESOP is actually given out by one company, it is for performance of that company. You cannot link it to performance of an associate company and give ESOPs to employees of that associate company, a separate company with their own kind of parameters. What we also look at is scheme concentration. So there have been instances where there are ESOP schemes only for top management. Okay, only for top management. So we want, and investors have told us, they prefer ESOP schemes where it is across the board, where it has to be, across the employee levels. So it should not be only to, executive directors and very senior management. It should actually trickle down to lower orders of ranks in the organization, because that is what keeps employees motivated then. We do not like the fact that, where NRC, where the Nomination and Remuneration Committee has overriding powers. Sometimes, what companies say is, okay, we are going to grant ESOPs at market price, which means complete alignment with investors. But if we feel at some point that the employees, if the stock price movement hasn't been great, we may change that, philosophy. We may give grants and discounts of 40, 50%, etc. In that case, there is no predictability around what is the final kind of price at which the ESOP will be granted. So we don't like that. And when it comes to dilution, right, a lot of corporates ask us this question, what kind of dilution level are you okay with? When ESOPs are issued, obviously the remaining shareholders get diluted. So what are you okay with? So we honestly, we don't see this as too much of a problem in the Indian context. That's because primarily India is, largely promoter driven. So promoters don't want to dilute themselves to a huge extent. The most dilution we see would be probably IT companies and financial services. But again, that's largely because a lot of them are widely held. They are institutionally owned. And the fact that all of these schemes for IT companies and financial services companies are across a large time frame. So even if the dilution of the scheme overall is 8%, it'll be across 10 years, etc. So annual dilution levels are quite low. These are some of the best practices that we've seen when it comes to ESOPs. HDFC Life always grants ESOPs at market price. So there is complete alignment with investors. So that typically goes through very easily. We had a smaller company, Dr. Lal Path Labs, where they had said specifically that, we'll grant the ESOPs at a discount, but the discount will be not more than 10%, which means they'll not be very deeply discounted. So there is, of course, at least some alignment between investors. There's some alignment between investors and employees. Performance parameters, I'll come to these examples, but are the industries where they actually gave out the weightage for each parameter. So they were very deeply discounted stock options, but they said, all the vesting of these stock options will be based on very, very specific performance criteria. Grasim also said that, we have these performance metrics. We have some ESG metrics as well, which again, they went actually a step further. And with HDFC Bank, this happened fairly recently. They disclosed the distribution of the RSUs. RSUs are obviously very deeply discounted stock options. They said they actually gave out the amount of stock options at each employee level. And they said, we will not give any deeply discounted stock options to our MD. So some of these examples, now this was a small company. I thought maybe I'll put some examples so that it's very practical for you to understand how, you can approach stock options, etc., and how our thought process around this has been. This is Newgen Software Technologies. Again, fairly small, but look at the amount of detail that they put in when it came to vesting conditions. So they actually said that, there will be two performance metrics. One will be revenue, one will be PBT. This is how we look at each of these metrics, 50%, 50%, each of them. What is the threshold? What is the maximum that you will get? On the right side, this was for, junior employees. And they actually said, we will look at one performance metric will be looking at individual department function achievement of targets also. So that's how you make it very, very localized, right? It's quite interesting how they did this. This was the Aarti Industries example that I spoke about. So they actually gave out the vesting criteria. They actually said, this is the performance criteria. We look at EBITDA and return on investment capital. Infosys, always great, always great. So their disclosures and the way they approach shareholder resolutions is really good. So in terms of Infosys RSUs, they actually gave out, what are the parameters on which we will allow these to vest. They actually went out and said, when we look at total shareholder return, which means stock return, we will benchmark against these peers. Okay, they actually put out, Accenture, Wipro, TCS, Cognizant. We will look at our performance against these peers to actually look at, final stock performance. And again, a good mix of everything, right? They looked at share price performance as well as revenue growth, digital revenue growth, op margin, etc. So with that, that was about ESOPs. I hope that gave you a sense of how we approach ESOPs. This is remuneration. By far, the resolution category that we spend the most time on internally debating. Again, those headline stats for you to get a sense of what is the amount of pushback. So we covered close to or over 1,000 remuneration resolutions in calendar year 2022. That's a large number by any stretch. It takes a lot of effort to put out, our analysis on remuneration resolutions. Only 9 were rejected, but again, that number where over 20% institutional investor dissent was there was high at 28%. I could, speak for 3 hours on remuneration, but I don't want to. I want to condense it into 10 minutes. So what we broadly look at is alignment with performance, pay versus performance. The directors included a large part of variable kind of component, long-term as well as short-term. Long-term is typically ESOPs, short-term is cash-based compensation. To align with company goals. So what this means is, it has to be linked. Remuneration has to, at that level, board level, has to be linked with performance of the company. And the way you align, you actually put out, performance metrics and you align it with performance is by adding a huge variable pay component. So if the company performs well, you take home a larger salary. If the company does not perform well, loss making or reduced subdued profits, etc., you take a smaller amount of money home. Peer comparison. Every industry has their broad peer benchmarks. There will be multiple companies within that peer set that we look at and say, okay, is this broadly in line with other professionals or promoters in that same sector or industry? We look at that very closely. There are certain industry types which honestly have struggled with, or at least investors have struggled with very poor remuneration disclosures and very high remuneration levels. I could give you a few examples. Pharma is an industry where remuneration levels have been typically very high. Cement companies, again, remuneration levels have been typically very high, especially for the promoter run kind of companies. We also look at pay from other companies where there are payments being made in the to the director from other companies in the group where shareholders have no ability to understand how much it is that they're getting from other companies in the group. We don't like that, and neither do investors. We look at stock option disclosures. Very few companies in India actually disclose the amount of stock options that may be granted to directors when it comes to remuneration approval. So that's been like a chronic issue in corporate India for a long time. We struggle with it as well. Performance metrics for variable pay. Like I said, right, pay has to be linked to company performance, and investors and shareholders need to understand why is it that you're paying a certain amount as variable pay. How are you measuring, alignment with company performance? How are you actually measuring the performance of a director? So what some companies have begun to do in India is actually put out, these are the 4 or 5 parameters that we look at when we are deciding remuneration, and an overall cap on remuneration. If there is companies actually say, okay, overall remuneration to this director, including everything, variable pay, ESOPs, etc. If there is an absolute number, some companies do it very beautifully. I'll come to that example. We really like that. Some additional factors, I'll just run through them. Pay fairness. If what happened in COVID, right? And this was unfortunate, but what happened in COVID is many companies actually told their employees to take a pay cut, but the actual CEO or the promoter, professional CEOs sometimes and promoter CEOs sometimes actually did not take a pay cut or took a smaller pay cut. And when the impact of COVID went away, it's not like the employee remuneration jumped by a huge amount, but the CEO remuneration jumped by a very large amount, 80-90% in some cases, which we thought was unfair. We also look at overall family remuneration, and if there is, any conflict of interest, if the NRC has promoter directors inside. So some of the best practices that we've seen, like I said, Infosys does a phenomenal job when it comes to remuneration, ESOP disclosure, and generally, I think on all governance and ESG parameters, if you want to look at some of the best practices in the industry, you can actually go to Infosys' site, go to their annual report, look at their sustainability report, and get a fair sense of how well they do these disclosures. So when it came to Salil Parikh's remuneration, right? Salil Parikh was got something like 80 crores, right? When it came to his remuneration in FY22, but there was barely any shareholder pushback because that number may look high, but when it came to disclosures, it was phenomenal. They had disclosed the variable pay, they had disclosed performance parameters, they had disclosed how many ESOPs he's liable to get. That actually proved that he deserves to get this much because of his performance over these 4 or 5 parameters. Remuneration from group companies, Bharti Airtel actually said that Sunil Bharti Mittal, who's executive chair, he will receive remuneration from group companies, so subsidiaries, but they had actually capped that number. They said this is going to be the number finally. GHCL, small company, mid-sized company now, but they had actually said in their nomination and remuneration policy that the aggregate pay to the MD will be capped at 15 crores. So this is one of the rare instances where we've seen the company actually put it out and say that while there is a structure, there is a variable amount, etc. This is what we are going to cap the overall remuneration. The remuneration, including ESOPs, everything will not exceed 15 crores. So this is the Infi example, just leaving it there. They've said, even time-based stock options, they said it was fixed compensation, variable cash compensation, performance grants, everything, right? Total performance-based remuneration, so variable pay, overall remuneration, everything was actually put out in a lot of detail here. These are the performance metrics. I spoke about performance metrics being very rare in the Indian context, but they're actually put out, these are the weightages. These are the broad KPIs, the key performance indicators that they will look at when deciding variable pay. Just again, just a visual representation of his pay structure. This is the GHCL example I was talking about. They had actually said that remuneration to the MD, including fair value of ESOPs, would be 15 crores. Overall, all executive directors would not get more than 30 crores. Again, one very rare example of an absolute cap being there on remuneration structures. Tech Mahindra, they had actually given out what is the number of stock options CP Gurnani will get. And this we thought was, even for us. So Karnataka Bank is a smallish kind of bank, not as large as its peers, but look at the amount of granular information, granular data that they had when it came to actually putting out the remuneration structure. So you could actually look out for, each and every aspect of pay. So total fixed pay was 72 lakhs. There was variable pay with targets. They're actually even put out what were the performance metrics for those variable pay, measures. We thought that was a lot of detail. So, which is why we keep, telling companies governance is size agnostic, right? If you really want to disclose, if you really want to improve governance practices, your size should not be a determinant of that. So Karnataka Bank, GHCL, etc., smallish companies, they are very small as compared to the large behemoths that we have in the Sensex and the BSE 100. They're not even in those indices, but look at the amount of detail that they are able to put out, right? They've thought through the whole process. With that, let me just come to maybe a very contentious kind of resolution type, which is related party transactions. The stats 650 odd RPT transactions covered by us, 9 of these rejected by shareholders, and only 15% had over 20% institutional investor dissent. Just to hark back to what I said earlier, RPTs over time, companies have gotten a sense of what disclosures investors want. SEBI has been very prescriptive about RPTs, right? So if you look at the recent regulations that have kicked in, the amount of disclosures that they need to have on RPTs, companies need to have on RPTs is staggering, which means companies have to think that much more in detail to actually come out with a resolution. And therefore, the pushback that you see on RPTs has actually come down over the years. Now with RPTs, right, while you may think they are very contentious, but we look at it very practically. If we think that they are largely operational and with fellow subsidiaries, etc., we tend to be okay with related party transactions. The problem is with, when the transaction is with promoter controlled entities, or, even uh, we've seen some instances where there are promoter entities in the same business as the core listed entity, and there are RPTs happening between these, and that becomes a point of concern for all of us, including investors. There was a large steel company where a large part of some raw material was coming from a promoter controlled company, where we saw no reason for that promoter controlled company to exist. So we kind of voted against. There was a lot of investor pushback. There was a lot of thought process and dialogue with investors around such structures, etc. So that is not something people are comfortable with. We look at the terms of the transactions. What kind of transactions are there? Is it simple operational transactions like sales or purchase? Is it in fact the problematic area is where loans are extended to group companies, promoter companies, or you're actually taking financial assistance from promoter companies. That becomes a challenge. What is the economic benefit to the interested parties? I spoke about the steel company example. So why should the promoter have another company which is directly competing with the listed company? Why should these not be merged, and why should all the business not be carried out through the listed company? Something that investors really ask. Value of transaction, risk of business adjacencies, we kind of just about covered. What are some of the best practices on RPTs? A couple of things that we've seen. Poonawalla FinCorp, they had transactions with another group company, Poonawalla Housing Finance, for intercorporate loan. They actually give out a lot of detail on it. Tata Group does very well on related party transaction disclosures. So they've made several acquisitions through the NCLT process, through the IBC process as well. So they've had a lot of steel companies. Of course, Tata Steel is the largest, but they have other multiple steel companies obviously getting consolidated now. But they have a lot of them. So there is a real need where there will be related party transactions between these companies which are allied in the same business. But the amount of detail that they give out is a lot. You cannot fault them for anything. Bharti Airtel is another example I'll come to. So this is the Poonawalla FinCorp example. I came to lots of detail that they have. They have the actual, benchmark rate. What is the thought process behind the transaction? What are the risk factors that they looked at? How did they come up with the, arm's length pricing arrangement, etc. Here again, some more detail on that. This is Bharti Airtel. They were making, they had some transactions with, subsidiaries, but they actually put out why they need it. And therefore, a lot of the investors get a sense of why the transaction is actually needed, and therefore they are more likely to vote for it. This is Schaeffler. Schaeffler, again, is a bearings company, ball bearings. They actually seek shareholder approval for RPT transactions every year. They give out each type of transaction, how much it is going to be, what is the actual value for that transaction, what is the projected value, etc. And there's a lot of detail. So this was, broadly what I wanted to cover in terms of related party transactions, ESOPs, remuneration, all very contentious. But to be honest, with the right amount of detail, with a great deal of transparency, companies can actually make sure these resolutions don't face a lot of shareholder pushback. Because what we've seen is, even though if resolutions actually get pushed through because of the promoter vote, the amount of reputational damage that it may cause if there's a lot of pushback or unnecessary media coverage is a lot, right? Companies are best at avoiding that. Two other resolutions categories that I thought we would cover our thought process around. And what I would like to caveat this is with the fact that there are a certain set of parameters that we cover in terms of these resolution categories, which are all there in our voting guidelines, but some additional things that we've begun to cover or begun to look at when it comes to these resolution categories. So director appointments, that is by far the most number of resolutions in a year are director appointments, simply by, by the nature of the whole regulation itself. There needs to be director, for actual appointment on the board, there needs to be specific approval. For removal, there needs to be approval. For reappointing a director, there needs to be approval. So the number of director appointment resolutions in the Indian context is very high. So these are some parameters we've begun to look at in addition to what we already look at. So one is overboarding, whether a director has a full-time role, how capable he or she is in being on the board of a company. Do they have enough time to actually spend on any of these? Retirement by rotation, whether or not this entity is liable to retire by rotation. Again, SEBI's recent board meeting has actually made it clear that they don't prefer the idea of some directors not being liable to retire by rotation. So what happens when someone is not liable to retire by rotation is the fact that, once they are on the board, it is effectively in perpetuity. Unless they decide to step off the board, that's not going to happen. And multiple instances of this happening recently also. So there was Dish TV where Jawaharlal Goel was voted out by shareholders, but by dint of being non-rotating, he could stay on as NED on the board. Of course, finally he stepped away. Started with Vijay Mallya, right, where he was out of the country and because of all of these issues surrounding his companies and himself. And just by nature of his seat being non-rotational and him being embedded in the articles of association, his name, they had a very tough time actually pushing him off the board, even with like a very minimal shareholding of below 4%. We are also beginning to look at business relationships where, independent directors, companies, have independent directors where the independent director may have a small or large business relationship, while they may be well within regulations where they don't, fall under the definition of pecuniary relationship as defined by law. They may still have some relationship. We see this a lot with a number of companies where, there are lawyers on the board and they or their firm is actually providing, legal services to the firm. So then, you question their ability to be truly independent. We look at governance failures. Now, this is a new one where there have been directors. Supposing there's a director who's been on the boards of other companies, and during whose tenure there have been major issues with the company, including governance failures. We may actually look at that when contemplating their appointment on another board. They are basically their reputation or track record. So that's on director appointments. These are some of the new things we've been, looking at now, because that's how investors have also moved. And this is alteration to articles of association. Again, significant, disconnect we see between investors and corporates here, where these are some of the things that we've begun to see. And of course, what SEBI is also planning to do is, put this under more scrutiny and periodic shareholder vote. Board nomination rights, where there are, sometimes what happens is there are private equity investors on the board. They have some significant investment or not so significant investment. They could have low shareholding, but still have a seat on the board. So we actually look at whether these, board nomination rights, whether these seats are actually tied to shareholding thresholds. So does the fine print say that, they will have at least 10% to have one board seat? Or is it just, kind of a broad brush statement saying that we will have a board seat irrespective of shareholding, which we don't like. Non-rotational board seats, whether or not they retire by rotation, again, that leads to board permanency, like I just covered. Committee nomination rights, we don't really like any investor nominee, any private equity nominee getting automatic kind of nomination rights to statutory committees. So there are some instances where you will have companies which say, okay, this is a private equity which has say 4% in our company. They will have automatic access. They will be members of the audit committee or the NRC committee. We don't like that because the intent of these committees is that the board needs to select those committees, and there should not be automatic, appointment rights on any committees. And quorum requirements. Now, this is interesting. We see this a lot, where companies say, if the investor nominee, if the private equity nominee is not present for a meeting, that meeting cannot happen because we will say that quorum is not met. This, of course, gives the investor the ability to stall meetings for as much as they want, right? For as much time as they want, etc. Which again we think is unfair. So these were, broadly what I wanted to cover. So I've covered something like 6 resolution categories, but what I would like to end at least my talk with is the fact that, we look at each of these resolution categories in a lot of detail. There's a lot of data that we have when it comes to resolutions. Like I said, by the time, this talk occurred, that number keeps changing, but the number of resolutions we've covered has exceeded 63,000. So needless to say, we've kind of seen every form and type of resolution there is. And we've kind of, the intent is again not to be hostile as a proxy advisor. The intent is to give corporates a sense of how we operate. The intent is to bridge the gap between corporates and investors, because investors have a sense of what they want to do. Corporates think they are doing it in the best interest of investors, but there is a disconnect sometimes, which is why shareholder resolutions get defeated. There's a lot of pushbacks. The intent is to actually bridge that gap and improve. At least I would like to think that we want to improve as a proxy advisor. We want to improve governance quality in the country. It's not us alone who can do that. All market participants have to be included, which is why we engage with corporates. We talk to companies, irrespective of any commercial dealings. We talk to them, we tell them, okay, this is what investors expect. This is what you need to disclose. On the other hand, with investors, we are trying to educate them on, this is good practice, this is what bad practice, this is what is happening globally. We are slowly getting there. We kind of try to bridge that gap, through our work, is what I would like to believe. So this is what, I had to say. Happy for questions. What I also asked, one of my colleagues, Vinesh, to do is, like I said, all of this data that I showed you is from a resolution database called Adrian, named after Adrian Cadbury, who's regarded as the father of modern day governance. He wrote a paper on governance, which has become like the gold standard. So I thought maybe it'll be good for you to have a look at, the kind of data you have access to now when it comes to analyzing resolutions or creating resolutions of your own. So I'll ask my colleague at whatever point, and depends, Dr. Narasimhan, let me know what is the ideal time to do that, but there'll be a short 10-minute kind of demo of what that tool is and what it's capable of doing.
I think let us finish it off so that we can go to question answers thoroughly.
Vinesh, you want to just give a very brief overview of Adrian? Let me stop sharing. So. Oh, Dr. Narasimhan, if it's possible to unmute him or give him access.
Mr. Vishwanathan, you may have to unmute him, allow him to share something. Controls are with Mr. Vishwanathan. Very good. Yeah.
Thank you everyone. Thank you, Anup, for that introduction. And thank you, Dr. Narasimhan, for having us in this webinar. So I'd like to use my 10 minutes in showing you our repository, which is called Adrian. like Anup rightfully said, it is named after Sir Adrian Cadbury. And okay, let me begin. I'll just pop my screen, and the next scene that you'll see is of Adrian. Sir, can you help me with sharing the screen, please? Can you give me the access? Hello.
Somebody's doing it. Yeah. Please.
All right, sir. All right.
Mr. Vishnathan? Mr. Vishnathan, can you please share the controls with him, please?
Yes, I can share my screen now. Just give me a moment, please.
Okay.
All right, sir. Right, sir. So yeah, so the screen that you see in front of you is the dashboard or the homepage of Adrian. So this will give you a little bit of idea of what all data is available on our tool. So this will show you the total number of meetings that we've covered, the total number of resolutions that were in those meetings, the total number of companies that are in our coverage list, and the total number of investor data that we have on this tool. On the bottom, what you see is a laundry list of all the upcoming meetings. This is one available in meetings view, where it will show you name of all the companies, or it is also available in resolutions view, which will show you each and every resolution and also give you a little bit of details like the type of resolution, what was the resolution description, what was R as in IIS's view, and the overall voting breakup and voting outcome. So yeah, this is the homepage of Adrian, and on the top we have a free search bar which allows you to search anything. For example, if you want to look for a company, you can type in name of the company. You can type in name of name of any of the investors, or you can also search for a particular resolutions. So for example, I'd like to, for example, if you're looking for a FMCG company, let's say Nestle, you can just type in Nestle over here, and the company will show right here. What this also shows you is all the meetings that we've covered so far. So for our purpose, what I'm going to do is I'm going to take you through one of these meetings and I'll show you what all data is available on this tool. So first thing that we capture over here is the profile of the company, which again will show you all the meetings. It will show you what is the script code, the NSE symbol, the ISI number, the sector and the industry that this company operates in. Then the details of this particular meeting, that resolution, the type of resolution, what was the IS's view, and what was the final voting outcome. We've also had the notice over here, which is also made downloadable and printable directly from here. Then we have the detailed recommendation report. Again, this is also made downloadable and printable. Then we have the breakup of voting outcome. This will give you details as in the total number of votes polled, votes that were in favor and votes that were against by each of the promoter investor group, be it promoter and promoter group, the institutional holders or others or retail investors. Now this is also available in percentages. So you definitely understand how much percentage of votes are coming against and from which investor group. Then we have something called how each investor voted, where we have listed all the investors and how they are voting for this particular resolution. Again, their rationale for voting is also listed over here. So once you hover on this tick mark, their rationale will also show up. Right? This is the meetings view. Then we have something called the resolutions view, which will allow you to search for resolutions and also fine tune your search further. So what we have done is to help you fine tune your search. We have added various filters over here. So for example, if you're looking for a particular resolution category, you may select it directly from here, click on save, and only those particular resolutions will show up. For example, if I'm looking for director's appointment, I'll select this, I'll click on save. and only those resolutions will show right here. Right. Similarly, we have various other filters as well, like the sections of the Companies Act, the type of resolution, the type of meeting, what was the final voting outcome, the sector and the industry that the company operates in, what was the investor vote, what was IS's recommendation, what was the other proxy advisor's recommendation, the percentage of voting, the percentage of participation of each of the investor group. Right? You can use various filters as well as you can use them in combination to fine tune your search. Apart from this, we also have something called the benchmark, which is basically what we have started doing is we've started benchmarking as in highlighting some of the resolutions which are best in class in terms of disclosures and transparency. So this is a toggle button which will give you a benchmark resolution. Again, these are available for all the categories. So basically we have benchmarks for each and every resolution category, and these are also updated regularly. So you will see there's a resolution that was benchmarked like 10 days back. So these are also regularly updated. Then we have something called the company's view, which will allow you to search for a particular company. You can type in name of the company and this will also show up. Then we have something called the investor's view, which will give you the voting history of various investors. So like I said, we have data of about 244 investors, which would include your mutual funds, your pension funds, your insurance funds, some of the AIFs, which are category 3, and some of the foreign institutional investors as well. I'll just show you what all data we have when it comes to the investor voting history. So yeah, this will show you all the resolutions where Aditya Birla Sun Life AMC has voted, and this will also give you the voting breakup. Again, here if I want to actually compare my votes of 2 of the investors, I can again do that. It's very easy. I'll just type in name of any of the other mutual fund, for example, HDFC. I'll select this. And now I can side by side compare how these 2 fund houses are actually voting. This will also allow you to understand what is the investor voting trend overall going in the market. Like Anup just mentioned, we have the voting guidelines, which is like the Bible that our analysts actually refer to while they're preparing the recommendation report. This is also made downloadable and available for everyone to review and use. Then we have something called the alerts feature, which allows you to configure 4 types of alerts. These are for upcoming meetings, for voting outcomes, for recommendation report when it's out, and one where the voting outcome is specifically rejected. So these are the 4 types of alerts you can set for any of the companies. You can select various companies from here, or you may select indices or the resolution category, a section of the Companies Act. And you can also set the frequency of these alerts, and a mail will pop up depending on the frequency you have set. Right. So that's all on Adrian, sir. If anyone has a question, please you are free to ask.
I think we'll take questions for you and Arup together.
Sure, sir.
Yeah. To start with, Arup, I have 1 or 2 questions for you. One, were there any observations you made on the board evaluation, which is the emerging topic just now? On board evaluation, did you find any resolutions or remunerations linked to board evaluation that was being done? That's one thing. And second question I have is that you have been very transparent and open with the market in terms of how do you recommend, what do you recommend, etc. Did you find that corporate governance standards have been on the improvement side, at least with respect to certain companies which are shown very bad earlier, but they're improving and have improved substantially well over a period of last 3-4 years? Any such observations? Kindly let me know. Thank you.
Sure. Dr. Narasimhan, on the first one, right, board evaluation and remuneration linked to board evaluation. Now, the problem with remuneration is that, right, while the nomination and remuneration committee knows exactly why, hopefully knows exactly why remuneration at a certain level is being paid to an executive director, the factors that the NRC actually thinks or looks at before deciding on that remuneration is very rarely accessible to investors. So those
Yes.
performance metrics that define that variable pay, like in the case of Infosys, where there was a lot of detail, that's very rarely seen in corporate India. So what some companies have started doing when it comes to board evaluation is that they've actually started saying, okay, here are the results of the evaluation.
Okay.
They've some companies, I'll give you a few examples. I think it was Cipla, there is HDFC, etc., who actually say, okay, we did the board evaluation exercise. Here is
Okay.
what we found. We found, for example, HDFC had actually said that we found that the board of directors wants to talk to senior management, one level below the executive directorship. They want to talk to other senior business heads as well to understand what they can do well, or what are the challenges, etc. And then they followed up saying, last year we discussed this. This was the progress made on that aspect.
Oh, very
I
good.
think, yeah, it's a great kind of start to have from corporate India. A lot of this is discussed internally, but not with stakeholders, not with external, shareholders.
Naturally. Yeah, yeah,
But
correct.
linkages with remuneration, we've very rarely seen the results of a evaluation exercise linked to remuneration. Even if
Okay.
it's happening, it's not disclosed.
Okay.
On your second question on governance standards, that's a very interesting question, Dr. Narasimhan. So, what we've done over the last few years is this is way back in 2016, in conjunction with IFC, which is which is the investment arm of the World Bank, IFC Washington, and BSE, our stock exchange. We came out with a corporate governance scorecard.
Yeah.
Okay, this is rooted in the OECD principles of corporate governance. So it has a great kind of framework behind it also. It's a set of questions, right? It's a set of questions
That,
where the response keys are 0, 1, 2. So we evaluated this. We started in 2016. We evaluated the top 100 companies on their governance practices. So what was like a very touchy-feely topic of governance, we kind of tried to make it a very quantitative number. Okay. And we did it annually. We are still doing it. We published a report in March. All of the results of all of these studies are on our website. What we
okay.
found out, and you are right in saying that we found that the governance standards based on this framework over the last 5 to 6 years has only increased.
Oh, very good. Excellent. That's a
Yeah,
very good news. Very good news.
absolutely,
Yeah.
absolutely. And of course, thanks in part to regulation, but also thanks in part to companies deciding that we need to improve.
Oh, fine.
So we've had companies who are really languishing at the lower end of that spectrum uh, way back when we started it, but they've come into the leadership categories now because
Oh,
they realized they need to improve disclosures by a huge amount, and which they
do you
have.
have, do you have any one or two examples offhand to just suggest?
Sure. So I'll give you a few examples. So Tata Group companies, they never figured in the leadership categories early on. Okay. Then they entered into a dialogue with us to understand, what are they not doing. And so there's an interesting comment made by the Tata Power CFOs who came to our event very recently. They are now in the top few. They said, we were always doing this internally. We did not know we had to communicate this. We did not know that investors want to know this, and we have to highlight it so that investors know we are doing it. We are a 100-year-old group. We thought they understand us, and therefore we don't need to communicate. But it is important to communicate. They've realized it, and they're doing a very good job of disclosures, and which is why they have kind of grown up the ranks. So that's an example offhand, but multiple companies which are very low in scores, which have improved by leaps and bounds over the last 5-6 years.
Actually, Arup, I should say that your presentation has been definitely a high opener, and actually it gives a lot of information, insights into the governance processes that a company should actually be doing. I leave the floor open to our colleagues who are participating. If you have any questions, kindly ask. Kindly let you introduce yourself and ask the question. That will be helpful. please. Mr. Vishnath, you might unmute participants also. Any questions, please? Oh, people are not asking questions. I don't know. Mr. Vishnathan, you have anything to say?
Yeah, just now unmuted everyone, so they can themselves ask the questions.
Okay, fine.
They can themselves unmute and ask the questions.
Okay, fine. Floor is open. Kindly ask your questions.
Narasimhan, Ananta Subramanian here.
Yes, sir.
See, now this, it was very insightful. I must say that a lot of processes which we were imagining or speculating have all been brought to light. I would like to ask Mr. Pawar as to how do the corporates respond to this, to the sort of initial observations which made by IAAS when they have that conversation with them, as far as, because the resolutions are already out. It's a more of a post facto process. So what would be their, in case are they keen to know as to how these resolutions will pan out? And what exactly is the sort of response which IAAS gets from the corporates?
Sure, so that's a good question. And honestly, a lot of time that we spend actually debating and finalizing our report is spent in talking with companies. So there are two types of responses we get, right? So
I must also add, Anup,
Yeah.
just a minute.
Sure.
I must also add that most of these corporates, most of these resolutions probably may have been vetted by the legal counsels.
Right.
Correct?
Right.
And that makes it much more interesting that it almost comes to the, the oft repeated phrase in the Indian context that we are masters in complying with the letter and not so much with the spirit.
That
I don't know. Maybe I am overreacting, but then I would like to listen from you.
No, that hits the nail on the head, sir. That's what we keep hearing. So like I said, there are two types of companies. So like I said, we are the only proxy advisor we would think who sends out the report in advance, right? Therefore, the amount of flack that we get, amount of calls that we get from companies saying, how can you write this? How can you vote against is also a lot more because we communicate proactively. That's not stopped us from communicating, but that is perils of being professional enough. So two types of companies: one where they say ki we are within the realms of law. You can choose to write whatever you want. We are legally compliant. Why do you say this? And when we try to explain that governance is well beyond compliance, they probably don't understand at that point in time. Although that's one type of company, there is another type of company that we now come across fairly frequently where they say, okay, I understand there is some disconnect. What is it that I can do to explain our thought process, or what is it that I can additionally disclose to let you know that that is not the intent? The intent is not to be less transparent or propose something that investors are not happy with, will not be happy with. Let us know what we need to do. So that when it comes to that second type of company, we can tell them, okay, make this additional disclosure on the website, make this additional disclosure on on the stock exchanges, and we can take that additional information into our decision-making process once it's in public domain. So they recognize that, investors look at us very closely. Investors may have a different set of expectations that they are not aware of right now, but they'll learn. Often we see that the first type of company, right, where they say we don't care, you can write whatever you want. When they see the final outcome, when they see that investors have called them and said, why are you doing this? Why are you not disclosing? IIS has said that you're not disclosing XYZ parameters. We tend to agree. They then come to us and then say, okay, fine, now we get it. we get that there is a disconnect between what we want to propose and what investors are wanting to say. And then they kind of give us additional information. So that's a painful learning process for them. But a lot of them then, engage with us regularly, engage with investors regularly, because they understand they have to do it. I hope that answers
I
your
have one. I have one additional observation to make in this context is that most of the time, company secretary knows what's happening and what more to be done, but he's constrained in his own way. I don't know how to say the details in this, but I'm sure that this kind of activism from the proxy advisory services and also activism from the investors, directors will get to know, promoters essentially will get to know that yes, transparency is the mantra going forward. Just now you given the example of Tata's. We do so many things internally, but we don't speak about. So similarly, I think promoters also will get to know that okay, jo karna hai karenge, but we would like to show what we are doing.
Yeah.
I think that will come very soon.
No, completely agree, Dr. Narasimhan. We've heard this so many times where the CFO says, okay, the drafting of the resolution, we were not aware of, the aspects that investors want. I did not even personally supervise it, or the executive directors did not look at it. The secretarial department probably thinks, multiple pieces of information is not necessary. Let's just do the bare minimum and send it out. So there is a disconnect between internal departments, or the board is not aware of what's happening and what is the best practice, etc.
Correct.
So that happens all the time. You're right.
Yeah.
Anup Pawar, there's an add-on to this question.
Sure.
Which is in terms of, do companies consult you before they draft the resolutions? Has there been any practice which you have, before which means they tell you that this is what, and this is precisely how we would like to structure this entire thing.
So you're right. So companies ask us, of course, we don't look at non-public information. So if they're saying that, there is something we are going to propose and therefore we will come to you before we go to the exchanges, we say that's not possible. We are not going to look at it. In the unfortunate event that, they disclose something to us, we have to put an embargo on, stock trading in that stock, etc., because we don't want to deal with non-public information. Sometimes they do, come to us and say, we have some, broad resolutions that we want to propose on remuneration. What would you suggest that we do, in order to be transparent? So in that case, we can give them some soft guidance, not related to the actual resolution. We ask them not to disclose anything. We give them some broad guidance around the resolution type that we are aware of. So if it's a remuneration resolution, we tell them, cap the overall amount, give out performance metrics. That is what investors want. Tell the investors when you actually go out, how many stock options you propose to grant and all of that. So that softer kind of advice we do give them from time to time. And the number of companies wanting us to take a look at their notices has only increased. We refuse every time. We don't want to look at non-public information, because that's a big problem for market participants. But we give them soft advice because, like I said, our intent is to improve governance standards. We don't want to be hostile. We don't want to be non-supportive to even the corporate space. We want to be. So we do engage with them.
Excellent. That's a very good practice. Yes. Any more questions? I think the database that you showed out also is an excellent repository of information. People would like to do something new, which they have not had an experience earlier. They can actually come for it because you're giving her a benchmark. That's a beautiful part of the database that you have structured. I'm sure it's going to be very helpful for people who take this corporate governance seriously. Yes, it's an excellent repository. You don't have to go to the market at all. Come to your site, check on this database, and then find out what has to be done. I'm sure there's a pricing involved. I don't want to talk about pricing in this seminar, but I'm sure if your contact details are available on the presentation you have given, and people who may be interested to have a benefit of your repository probably will definitely come back. Mr. Viswanathan, you'd like to propose a word of thanks?
Yeah, good afternoon, everyone. I find quite a few good number of participants who have participated in this webinar after a sojourn of almost 2 years. Hopefully, being probably the week, the month end of April and board meetings coming lined up. A lot of my company secretary colleagues have called me and told me that they would be watching the recording, and they've asked me to send the link to them. So it was a wonderful experience. Like last time we had Mr. Tandon telling us, and this time Pawar, I think, properly explained, and more the importance of proxy advisory, his recommendations, and also when you prepare your disclosures, we tend to see the requirement of the Companies Act, LODR, and probably sectoral standards. But we should also look at the requirement of the investor, what he is looking at. Or not only looking at the regulatory aspect will not do, we need to have that also in mind so that the resolutions can pass through without any issues. I think, thank you, Pawar, and also the IIS team for giving us this giving us this presentation, and also giving your insights, and especially on those points where you informed about those resolutions, why did not they go through and why did they go through. I think it was a really wonderful 1.5 hours spent on a Saturday morning. Thank you. And I request all the participants, like what Mr. Rasuman has already informed at the start of the program, in case you have any topics on which you feel we should be having sessions, you can write to us. We will send the email IDs to you. We have got the database. We will send you the email ID, and you can please do write to us, and we'll like to have those programs arranged. Thank you so much.
Thank you,
all.
Dr. Narasimhan. Thank you for the opportunity, and absolute pleasure to be here.
Yeah.
Look
Please
forward
convey
to-
our special regards to Mr. Amit.
Sure, I will.
And we are ever grateful to you for the excellent presentation.
Amit is already there, so I think he must be listening to us. Amit, can you come on mute? Because can you?
I don't know why it's not just hold on. Let me. Yeah, there it is. I've been hearing Anup and all of you, Mr. Narasimhan. Good to see you after a while.
Good to see you. Excellent presentation. I loved it. Yeah.
Anup you're in good hands with Anup and also Vinish there at the other end. But Anup did a fantastic job out today.
A very fantastic job. Absolutely no doubt. No doubt about that. And I think it's a very good contribution to the whole cause of corporate governance in our country. I think I should thank you and your colleagues in Proxy Advisory Services space. You are doing a wonderful work for the country. No doubt about that.
I'll say one thing, we like such dialogues with industry participants. So, we're happy to make it an annual event where we talk about learnings from, at the end of the season, sometime at the end of the year or early next year, learnings from this year and what are the regulatory changes coming forward. So that is something which can be useful, and you can add it on your events calendar going ahead.
Fantastic, Mr.
I'm committing Anup to you, so it's easy for me to do that.
Thank you very much. Thank you. Excellent.
Amit, now I think you can count. You have said you are giving Amit to us. You can count Sage Governance Advisory also in your scheme of things.
Thank you very much, sir. Thank you very much.
It was a wonderful suggestion you gave, and then our coming back started with the bang, if I may say so. It is because it is just exactly what one would have wished for, because people talk of the letter and spirit, and the spirit is precisely what the IIAS seems to be guiding people with. So to that extent, I am extremely delighted to have been part of this.
As you said in the beginning, it'll be very timely, so I'm glad it worked out today. But thank you very much. And
thank you very much. Thank you very much, Mr. Thank you.
Thank you. Bye.
Thank you, Anup.
Thank you. Bye-bye.